Hey everyone, it's Umair from Realty Solutions, and welcome back to the channel where we help you make smarter real estate decisions. Buying a home is one of the biggest financial moves you'll ever make, and securing a favorable mortgage rate is absolutely crucial in today's market. A lower rate can save you tens of thousands of dollars over the life of your loan. That's why in this video, I'm going to be breaking down 5 essential steps you can take to score the best possible mortgage rate in 2024. We'll be diving deep into actionable tips, exploring different loan options, and showing you exactly how to position yourself for success in this competitive market. So whether you're a first-time homebuyer or a seasoned investor, grab a notebook and let's get started. Hello everyone! Welcome back to Realty Solutions, your go-to channel for everything real estate. Today we're diving into one of the most crucial aspects of buying a home, getting the best mortgage rate in 2024. Stick around till the end for some expert tips that can save you thousands of dollars. Alright, let's kick things off with the foundation of a strong mortgage application. Your credit score. Now, your credit score is like your financial GPA, and lenders use it to assess your credit worthiness, basically how likely you are to repay your loan on time. A higher score tells lenders you're a low-risk borrower, which translates to better interest rates and loan terms. Think of it like this. You've got 2 people applying for a loan, both with similar incomes and down payments. The person with the higher credit score is going to be seen as the safer bet, right? And because of that, they're going to get offered a lower interest rate, which means they'll save a ton of money over the life of their loan. Now you might be thinking, okay Umair, that makes sense, but what if my credit score isn't where it needs to be? How can I improve it? Well, the good news is that there are several things you can do to boost your score before you even apply for a mortgage. First and foremost, you've got to pay your bills on time. I cannot stress this enough. Payment history makes up a significant portion of your credit score, so even one missed payment can really hurt you. Set up automatic payments or reminders to ensure you never miss a due date. Next up, let's talk about credit utilization. This refers to the amount of credit you're using compared to your total available credit. The lower your credit utilization, the better. Ideally, you want to keep it below 30%. So if you've got a credit card with a $10,000 limit, try to keep your balance below $3,000. Another important step is to review your credit report regularly for any errors or inaccuracies. You can get a free copy of your credit report from each of the 3 major credit bureaus, Experian, Equifax, and TransUnion, once a year. Go through them carefully and dispute any mistakes you find. Now, I know building good credit takes time, but it's one of the most impactful things you can do to secure a favorable mortgage rate. So be patient, stay consistent with these tips, and you'll start seeing those numbers go up. Alright, moving on to step number 2, saving for a larger down payment. Now, I know this might seem like a no-brainer, but trust me, it's worth repeating. The more money you can put down up front, the less you'll need to borrow, which means lower monthly payments and a better interest rate. Think of it like this. When you make a larger down payment, you're showing lenders that you're serious about this investment and that you're less risky to lend to. Plus, a larger down payment can even help you avoid paying private mortgage insurance or PMI, which is an added expense that protects the lender if you default on your loan. Now, I understand that coming up with a large down payment can feel like a daunting task, especially in today's market. But even if you can't afford a 20% down payment right away, don't get discouraged. There are still plenty of options available to you. One strategy is to set a realistic savings goal and create a budget that allows you to consistently contribute to it. Consider cutting back on unnecessary expenses, picking up a side hustle, or even selling some of your belongings to boost your savings. Another option is to explore down payment assistance programs. There are various government-backed and non-profit organizations that offer down payment assistance to eligible home buyers. These programs can provide grants or low-interest loans to help you bridge the gap. Remember, every little bit counts. Even if you can only increase your down payment by a small percentage, it can still make a significant difference in your monthly payments and the overall cost of your loan. So get creative, stay committed to your savings goals, and you'll be well on your way to securing a more favorable mortgage rate. Alright, let's move on to step number 3, shopping around and comparing mortgage rates. Now this is where things get interesting because just like you wouldn't buy the first car you see without comparing prices, you shouldn't settle for the first mortgage rate you're offered either. Different lenders have different underwriting criteria and risk appetites, which means they might offer different rates to borrowers with similar profiles. By shopping around and comparing offers from multiple lenders, you can ensure that you're getting the most competitive rate possible. Now I know what you're thinking, Umair, that sounds like a lot of work. Do I really need to contact a bunch of different lenders? Well, here's the good news. Technology has made it easier than ever to compare mortgage rates from the comfort of your own home. There are tons of online mortgage comparison tools and websites that allow you to input your financial information and receive personalized rate quotes from multiple lenders within minutes. This can save you a ton of time and effort, and it allows you to quickly identify the lenders offering the best deals. When comparing rates, it's important to pay attention to more than just the interest rate. Make sure you also factor in closing costs, loan fees, and other expenses associated with each loan. Sometimes a lender might offer a slightly lower interest rate but make up for it with higher fees, so it's crucial to look at the bigger picture. Remember, knowledge is power when it comes to securing a favorable mortgage rate. By taking the time to shop around and compare offers, you can potentially save yourself thousands of dollars over the life of your loan. Let's move on to step number 4, which is understanding different loan types and terms. This is where things can get a little bit confusing, but don't worry, I'm going to break it down for you in a way that's easy to understand. When it comes to mortgages, there are two main categories: fixed rate mortgages and adjustable rate mortgages, or ARMs. With a fixed rate mortgage, your interest rate stays the same for the entire life of the loan, which means your monthly payments will also stay the same. This can provide peace of mind, knowing that your payments won't suddenly increase if interest rates go up. Now, ARMs, on the other hand, have an interest rate that can fluctuate over time. They typically start with a lower introductory rate for a set period, and then the rate can adjust periodically based on market conditions. While ARMs can be tempting because of their lower initial rates, it's important to consider the risks involved. If interest rates rise significantly, your monthly payments could increase substantially, which could put a strain on your budget. In addition to the type of mortgage, you'll also need to choose a loan term, which is the length of time you have to repay the loan. The most common loan terms are 15 years and 30 years. Shorter-term loans, like 15-year mortgages, typically come with lower interest rates but higher monthly payments. This is because you're repaying the loan over a shorter period, so the payments are spread out over fewer months. Longer-term loans, like 30-year mortgages, have lower monthly payments but higher interest rates. This is because you're spreading out the repayment over a longer period, so the lender is taking on more risk. The best loan type and term for you will depend on your individual financial situation, risk tolerance, and long-term goals. It's important to carefully consider all of your options and choose the loan that best aligns with your needs. Now, let's move on to the final step, which is locking in your mortgage rate. Once you've found a lender and loan program that meets your needs, you'll have the option to lock in your interest rate. A rate lock is a guarantee from the lender that they will honor a specific interest rate for a certain period, typically 30 to 60 days, even if interest rates go up during that time. This can provide peace of mind, knowing that your rate is secure while you finalize the loan process. It's important to note that rate locks aren't free. Lenders typically charge a fee for a rate lock, which is usually a percentage of the loan amount. However, in a rising interest rate environment, the cost of a rate lock can be well worth it, as it protects you from potential rate increases. When deciding whether or not to lock in your rate, it's important to consider your risk tolerance and the current market conditions. If you're comfortable with the current interest rates and you're concerned about rates rising, it might be a good idea to lock in your rate sooner rather than later. On the other hand, if you're willing to gamble that rates might go down, you could choose to float your rate, which means you don't lock it in and you take your chances with the market. However, keep in mind that if rates go up, you'll be stuck with the higher rate. Locking in your mortgage rate is an important decision that can save you money and provide peace of mind during the home buying process. Be sure to discuss your options with your lender and choose the approach that best suits your needs. 5 powerful steps to help you secure the best possible mortgage rate in 2024. Remember, knowledge is power, and by implementing these strategies, you'll be well equipped to navigate the mortgage process with confidence. Buying a home is a significant milestone, and I'm committed to providing you with the resources you need to make informed decisions every step of the way. If you found this video helpful, please give it a thumbs up and consider sharing it with your friends, family, or anyone who might benefit from this information. And don't forget to subscribe to Realty Solutions for more valuable real estate tips, insights, and strategies. Thanks for watching, and I'll see you in the next video.